We are live.
Okay, so welcome all the participants who have joined us here through Zoom or through the live streaming on YouTube to this webinar, a live session on a very important topic, which is going to be, we'll be discussing practical issues and case studies in GST annual return. And as you must be aware, for the financial year 18 and 19, the date is not far away. It's 31st of December, along with other compliances as well. So, as your technology partner, we have requested our knowledge partner, Pitam ji, who is an expert in GST and specifically in annual returns, to put a light on the issues that the chartered accountants, that the company professional accountants face while file this particular return. So, very good evening, all the participants. I hope I'm audible. Can you revert back on the chat section? A lot of people are saying no sound.
You're audible, Shubham.
Thank you, sir. So to those people who think that I'm not audible, they can switch to our YouTube streaming. We are also live on YouTube. I would like to request Akash to kindly share the YouTube link in the chat box. Before beginning the session, I would like to request all the participants to kindly turn off their videos for a better bandwidth. Only the session takers are requested to keep their videos on, so that we can see them as well. So to begin, Pitamji, you can turn on your video, please. Yeah. Okay. So to begin with, I would like all of you to go to our YouTube channel, which is Webtel Electrosoft Private Limited. Subscribe it, as you will be able to find all the updated content, GST updates, even the recording of this particular video, and all the knowledgeable session on compliances exclusively for our clients and or our participants on our YouTube channel. Also, we have a close group on Facebook named as GST Tutor. So it's a community wherein you can post, you can see and get updated on daily basis what's going on GST. So take a screenshot and don't forget to subscribe the YouTube channel and join our Facebook group. So I am Shubham from Team Webtel, and here's a look at our products. We are basically a 2-decade-old compliance company. We have a bouquet of products for professionals and corporates related to compliance and practice management. To carry on, Webtel is also an ASP GSP. So we are providing A to Z solution for all your GST needs, being it return filing, monthly returns, annual returns, or seamless integration for generation of e-way bill and e-invoicing. We've been doing e-invoicing webinars in past, so you must be aware of that as well. So in case you have any needs for GST solution, you can visit our website, which is www.webtel.in. So it is my pleasure to introduce our knowledge partners, Tattvam Advisors, who have been with us from a long time now. And again on our platform, CA Pitam Goel ji and CA Abhishek Mittal ji, it's very nice to have you. I'll just take a couple of minutes to introduce both of them. So CA Pitam Goel ji is a gold medalist and a rank holder in CSA examination. Along with that, he is having more than 15 years of experience. He's an ex Lakshmi Kumaran and Sridharan attorneys, and now he is the promoter and the partner at Tatvam Advisors. Welcome, Pitamji. Sir, you are muted.
Thank you, Shubhamji.
Along with him, we have Abhishek Mittal, who's also a chartered accountant and a very good friend of mine. He's working along Pitamji and in Tatvam Advisors and have around 5 years of experience in indirect taxation. They both are specialized in indirect taxation, and I think without going into a deep introduction, I would like to uh, uh, hand over the relay to both of them to go through the topic so that you gets aware that how knowledgeable they are. So it's over to Pitamji and Abhishek for your presentation.
Thank you, Shubhamji. So just allow us a minute so that we can share our screen.
Sure, sir. I would like to mention a couple of things before, sir, you begin. I would like to request all the participants to kindly stop their videos so that you don't become the center of the attraction in this webinar. And along with that, you can ask your queries. We have both of them, but while they are presenting, it will be very difficult for them to explain your queries. So we'll take them at the end of the webinar. And after they take the webinar, we have a small demonstration as well. So keep posting your queries. We'll collect them and take it at the end of the session. Over to you, Pitamji.
Very good evening to all the participants. Just to reconfirm, is my screen visible?
Yes, sir. Black and clear, sir.
Okay. Thanks a lot. So friends, we have gathered today to understand the overview of the form GSTR 9 as well as GSTR 9C. So what will be the flow? How we will be able to understand these things today? Just to introduce, we will first have an overview of the outward supply with regard to 9 and interlinking the same with 9C. What need to be filed in GSTR 9 with respect to outward supplies and how it is linked with our GST audit forms and how it has to be interlinked. That is something which we will understand. Secondly, we will have case studies to substantiate 9 and 9C in various case study formats. Thirdly, we will understand the inward side and the interlinking between form 9 as well as 9C. So after that, we will have the case studies to substantiate the same. Lastly, but not the least, we will also have an overview over the legal discussions or the legal aspects which need to be undertaken for the purpose of carrying out these audits form 9 and 9C for the purpose of preparation of 9 and 9C. So these legal audit checkpoints are also relevant from the point of view of the departmental audit. So friends, as you all know, for financial year 17-18, departmental audits have already been started. It has already been initiated. So whatever points department officials are raising, that also we have tried to club together and we have tried to form a basis so that while forming our 9 and 9C, we take a substantial effort in forming the legal parts as well. So now coming to the outward supply. If we see GSTR form 9, so if we see in a holistic way, GSTR form 9 is subdivided into 6 parts with 19 reporting heads. So the first basic part is consists of 3 reporting heads. These consist of GSTN, state, whatever the case may be. So these are the basic details which need to be captured. Second part, when we talk about, is the liability part, which forms part in respect of table number 4 and table number 5. Table number 4 and table number 5, the second part, represents the actual outward supply, the actual outward tax liability which a taxpayer need to pay. The third part is something which is relevant with respect to the input tax credit, which is to be filled in table number 6 to table number 8. Fourth part is the tax paid details. What was the tax payable by me as a taxpayer, along with what tax I have already paid through my form 3B. Fifth part is the adjustment part. Adjustment part includes the adjustment related to outward as well as adjustment related to inward, with respect to the transactions pertaining to financial year 18 and 19, which we have missed to file in 3B for 18 and 19, but we have filed in 3B pertaining in 1920. So that is the adjustment for transactions transactions for 1819, which we have reported in 1920, is something to be shown in table number 5, part number 5, table number 10 to table number 14. Sixth is the miscellaneous part, that is table number 15 to table number 19, which includes refund actually taken. It is basically a reporting table with respect to the HSN summary of inward, HSN summary of outward, refund claim, refund granted, and the pending refunds. So when we club these tables together, total 19 tables and 6 parts together, so we get to know 3 main aspects. One is the outward details. Second is the inward details. Third is the others categories. So when we combine this with respect to outward details, we need to understand, while filing or preparing my outward details, I need to take care of table number 4, table number 5, table number 10, and table number 11. So when I am actually preparing my 9 and 9C, for the purpose of outward supply, I need to take 4, 5, 10, 11 together with respect to transactions for 1819 reported in 1819 and also reported in 1920, which we will understand a little later. When we talk about inward supplies, we need to see table number 6, table number 7, table number 8, and 12, 13 taken together. So we should not bifurcate it according to the reporting heads. Instead, we are bifurcating it according to the subject matter: outward supply, inward supply, and the subsequent part, that is the miscellaneous thing. Miscellaneous thing, as discussed earlier, forms table number 14, 15 to table number 19. In this, we have to fill the informations with respect to the HSN summaries, with respect to the tax paid, details of demands, details of refunds, is something which need to be figured out. Now, when we talk about outward supply, we need to take care of table number 4, table number 5, table number 10, and table number 11. So table number 4 and 5, when we talk about, it is in respect of transactions for the financial year 18 and 19, which have been reported in 18 and 19 only. Means वो transaction जो मेरी 18 and 19 की है और मैंने 18 and 19 के अंदर ही अपनी GSTR 3B के अंदर उसको रिकॉर्ड कर दिया है, वो transaction will form part of my table number 4 and 5. The difference between table number 4 and 5 is something which we will understand a little later. Table number 10 and 11, इस tables के अंदर we need to map out those transactions which actually were transactions pertaining to financial year 18 and 19, but we have reported these transactions in 1920 GSTR 3B. So जो transaction मैंने 18-19 की 18-19 में ही report कर दी थी, that will form part of my table number 4 and table number 5. Those transactions which I have reported in subsequent year, that I need to show in table number 10 and table number 11. So जैसे हमने पहले understand करा, table GSTR 9 के part 1 के अंदर 1, 2, 3 are the basic details which we need to figure out or which we need to put in. Part 2 is details of advances, inward and outward supplies made during the financial year on which tax is payable. So the main difference of table number 4 and table number 5 is table number 4, we need to map those transactions on which tax has been paid by the SSC. Whereas table number 5, we need to provide the details of outward supplies on which tax is not payable. For example, if an export transaction I have made with without taking the benefit of an LUT, so I have made an export transaction with payment of duty, is something which I need to map out in table number 4. Same, if I convert, if I take a vice versa case, I have made an export transaction on which I have utilized the LUT benefits and I have made exports without payment of duty, is something which I need to show in table number 5. तो अगर हम टेबल नंबर 4 and 5 की डिटेल्ड समरी की बात करें, व्हाट नीड टू बी इंक्लूडेड इज समथिंग व्हिच वी विल अंडरस्टैंड. अगर हम टेबल नंबर 4 के अंदर बात करते हैं, 4A के अंदर, we need to figure out the supplies in B2C and B2B columns separately. We cannot club the supplies made B2B and B2C combined, and we cannot report it together. So we need to bifurcate the transaction in according to B2B and B2C, and this is something which we need to map out mandatorily. टेबल नंबर 4A में अगर आप देखेंगे, so we need to mention supplies made to unregistered persons, that is B2C transaction. टेबल नंबर 4B के अंदर we need to map out the transactions made to B2B supplies. The important part to understand here is टेबल नंबर 4A में जो हमें फिगर डालनी है, the figure which we need to map out is the net figure. मीन्स अगर मैंने कोई B2C को कोई क्रेडिट या डेबिट नोट रेस करा है, आई नीड टू मेक अ फिगर नेट. 4A के अंदर मेरी नेट फिगर जाएगी. जबकि जैसे ही मैं बात करता हूं B2B ट्रांजैक्शंस की, इन टेबल नंबर 4B आई नीड टू मेंशन ओनली my taxable supplies. The debit and the credit note is something which I can include in table number 4I and 4J. The table number 4A and table number 4B are mandatory fields, friends. These need to be included on a compulsion basis. We cannot overrule these. Table number, when we see table number 4C, it is the export transactions on which I have actually made the tax, or actually I have paid the tax. Export with payment of duty is to be shown under 4C. Same thing with SCZs. Supply to SCZs on payment of duty is to be shown under table number 4D. 4C and 4D are again the mandatory fields which we need to map out. 4E is the deemed exports which we are supplying and on which we are already paying the taxes, is to be reported in table number 4A. 4F, my friends, is the table on which I need to show the advances on which the invoices has not been issued. Means वो advances जो पे मैंने टैक्स पे कर दिया है बट अभी तक मैंने इनवॉइस इशू नहीं करा है, that is something which I need to show in table number 4F, and it is again a mandatory field. So friends, जब हम बात करते हैं डिपार्टमेंटल ऑडिट की, 4F is also very very important point, because जो भी मेरी बैलेंस शीट्स के अंदर फिगर्स आ रही होती हैं, डिपार्टमेंट ऑलवेज क्रॉस वेरीफाई कि क्या उस एडवांस पे मैंने 4F के अंदर अगर वो अमाउंट मैंने क्या 4F के अंदर whether I have included that amount or not, or in case I am not included that amount, whether there is a walkthrough available with me with respect to the amount shown in table number 4F with my advance lying in my financial is something which we need to figure it out. And also 4F is a mandatory fee. One more important thing, अगर मैंने कोई unadjusted advance, if there was some unadjusted advance which was lying in 17 and 18 financial year, on which I have issued the invoice in 18-19, when we see the pre-filled GSTR 9, the 4F figures are negative. So instead of showing those negative figures, as these supplies have been made on which invoice has been issued in current financial year, is something which we can include in table number 4A or 4B, whatever the case may be. Then table number 4G, we need to show the figures on which RCM is applicable. And this again, my friends, is a mandatory field to be shown. Now coming back to table number 4I, J and L. 4I, J and K and L. These tables are in respect to credit notes, debit notes or amendments pertaining to table number 4B to 4E. So if we see table number 4B to 4E, these are with respect to B2B transaction or on export transaction on which I have actually made the on payment of duty. So this is something which is optional, made optional by the council. So we have both the option whether to report in table number 4 IJKL, or what we can do is that we can net it off in table number 4B, 4C, 4D itself. But my friends, we need to have the backup working. What was the actual supplies made and what was the credit or debit note issued. So while framing GSTR 9, we have an option available with us to include the debit and credit note in table number 4B and 4C directly or net it off. But still, as a backup paper, we should have the figures of invoice raised and the invoice wise transactions of these credit and debit notes along with the amendments thereof. So now coming to what will form part of my GSTR 9. So 9C. 9C will club all these turnovers except the turnover on which RCM was payable. So we need to understand, जब हम 9C भरेंगे, 9C के अंदर वो GST की कौन सी टर्नओवर उठाएगा for the purpose of reconciliation. For the purpose of reconciliation, my 9 will not include table number 4G, as this is not a turnover which is there on my financials. This is a transaction inward supplies on which I was supposed to pay tax under RCM mechanism. So now coming to table number 5. So table number 5, when we talk about, is a table with respect to the transactions on which tax was not payable. So 5A, when we talk about, it is export without payment of duty. So as friends, for export without payment of duty, we need to have LUT mandatorily. So it is something which we need to check it out. Same with supply to SCZ. अगर हमने कोई supplies SCZ से export करी है जिसपे हमने payment नहीं करी है, that we have to show in table number 5 and table number 5B, and it is again a mandatory field. Table number 5C, supplies on which tax is to be paid by the recipient on the reverse charge basis. वो transactions जिस पे मेरे recipient को tax pay करना है, means I am a freight forwarder and I am putting a stamp that my recipient is subject to tax. Advocate, where recipient is subject to tax, that is something which I need to show in table number 5C. 5D and 5E, when we talk about, friends, while analyzing our returns, this was a very common question that the assessee have missed out to report the exempted and the nil rated turnover in their GSTR 3B. So while framing GSTR 9, we need to make sure that all the exempted income, nil rated supply, whether it forms part through high C sale, dividend income, interest income, then sale of flats after having an occupancy certificate, is something which we need to show under exempted and nil rated supply. Friends, जैसे ही हम कोई भी figure exempted supplies के अंदर डालते हैं, sorry, we need to make sure that the rule 42 and rule 43 read along with section 17 gets attracted. So we need to be double sure whether the reversals under rule 42 with respect to the input goods and input service and rule 43 with respect to the input on capital goods, whether we have complied with these two rules or not. So table number 5D again is a mandatory field. So we need to mandatorily show all the exempted turnover made by the assessee during financial year 18 and 19. So again, table number 5HIJKL are in respect of the credit and the debit notes on which pertaining to transactions from 5A and 5F on which debit and credit or amendments have been carried out, and these again are the optional field. So we again have an option whether to show the net figures in table number 5A to table number EF, or to show table number 5A to F on gross basis and debit credit notes and amendments in table number G to table number N. Now, what is the flow of table number 9? So these are the two tables broadly with respect to my output supplies pertaining to the transactions for 18 and 19, which we have shown in 3B of 18 and 19 itself. Now, table number 9 is actually a reconciliation of the tax which was actually payable as per my table number 4 and table number 5 vis-a-vis the tax which I have actually paid. जो मैंने टैक्स एक्चुअली में पे करा है थ्रू माय 3B. सो 9 इज अ कंपैरेटिव स्टेटमेंट कि टैक्स मुझे कितना पे करना था और मैंने कितना पे करा है. इट माइट बी अ केस कि जो मैंने टैक्स पेबल टेबल नंबर 4 में डाला है, जो 4 की ट्रांजैक्शंस हैं जो ऑटोमेटिकली फ्लो होती हैं टेबल नंबर 9 के अंदर, आई हैव पेड द टैक्स अकॉर्डिंगली इन GSTR 3B. ये भी केस हो सकता है कि मैंने गलती से GSTR 3B में टैक्स एक्स्ट्रा पे कर दिया था, हेंस टैक्स पेबल इज लेस एंड टैक्स पेड इज मोर. इट माइट ऑल्सो बी अ केस के टैक्स पेबल थ्रू table number 4 is more, whether I have paid less tax. So these things we will cover through case studies a little later. So the important point here is 9 is actually a table for the reconciliation or the walkthrough of the tax which was actually payable by an SSC vis-a-vis with the tax paid. So now coming to table number 10 and 11. So when we talk about table number 10 and 11, this table hits when for the transactions for the financial year 18 and 19, which we have missed to report in 3B of 18 and 19, and we have reported in the returns for financial year 19 and 20. वो transactions जो मेरे financials या मेरी supply तो थी 18-19 की, बट एक्चुअली पे उस पर मैंने टैक्स पे करा है 19 and 20 के अंदर. सो ऑल दोस ट्रांजैक्शंस नीड टू बी शोन इन टेबल नंबर 10 and table number 11. And my friends, this again is a mandatory field. So we need to have the detailed working, transaction wise working of the credit debit notes or the amendments for the transactions pertaining to फाइनेंशियल ईयर 18 and 19. और जो भी इसका 10 and 11 टेबल का टैक्स का इंपैक्ट है, लाइकवाइज टेबल नंबर 9 वाज देयर फॉर टेबल नंबर 4 and 5. सेम वे टेबल नंबर 10 and 11 का जो भी नेट टैक्स का इंपैक्ट है, वेदर हायर टैक्स और वेदर लोअर टैक्स, इज टू बी शोन, is to be mapped in table number 14. And table number 10, 11 and 14, my friends, will form basis of my GSTR 9 for financial year 19 and 20. Same way as it forms basis for my current GSTR 9. When we filed GSTR 9 for 19 and 20, 18 and 19, likewise we have filed table number 10, 11 and 14 for financial year 17 and 18. तो जो 17 and 18 के अंदर हमने टेबल नंबर 10, 11 and 14 की फिगर्स प्लॉट करी थी, इट विल फॉर्म बेसिस फॉर माय 18 and 19 रिटर्न्स. सो दिस इज टोटल व्हेन वी टॉक अबाउट टेबल नंबर 9, GSTR फॉर्म 9. नाउ कमिंग टू GSTR 9C. 9C is actually divided again into 5 parts. First part is with respect to the basic details. Second part is the turnover reconciliation. Turnover reconciliation is actually a reconciliation between my financial reconciliations, जो turnover मेरी books के अंदर आ रही है, vis-a-vis the turnover which we have shown in GSTR 9. Means वो turnover जो मेरी books में आ रही है, vis-a-vis वो turnover जिस पे मैंने tax actually में report कर दिया है. Table part 3 forms basis the reconciliation of tax paid. टैक्स क्या 5% पे अट्रैक्ट करता था या 12 पे करता था, 18 पे करता था, 28 पे करता था. So this is a total reconciliation statement of tax actually paid vis-a-vis tax payable. Part 4 talks about the ITC reconciliations. वो ITC जो मैंने 3B में क्लेम करा है vis-a-vis the ITC which is appearing in my financial statements. Part 5 is the auditor's recommendations. मेरी वो recommendations जो एक्चुअली में ना GSTR 9 में रिपोर्ट हुई या 9C में रिपोर्ट हुई, बट मुझे लगता है कि उस ट्रांजैक्शंस पे टैक्स पे होना चाहिए था, whether it is forming part of 9 and 9C. It does not form part of 9 or 9C, but still I feel that the tax need to be paid. That forms part of my auditor recommendations. So now coming back to 9C, my friends, when we talk about the preparation of 9C, first of all, we need to have the financials of the company or the SSC bifurcated into the state-wise trial balances. अगर मेरा कोई SSC है who is registered under 10 different states, so prima facie, or the first step for me is to bifurcate that balance sheet and the financials or the financials profit and loss account into 10 different states, ताकि I can plot my numbers according to that particular state. I can perform my GST audit on that particular state is something which I need to figure out firstly. Second step is I need to map the turnover with my 9 along with my financials turnover. Third step is tax paid. Fourth step is ITC. Fifth step is any other certain liability जो कि financials या मेरी return से नहीं निकल के आ रही है. So this is the broad steps how we need to map out 9C. That is how we need to carry out GSTR, GST audit. So when we talk about GST audit, turnover reconciliation. So turnover reconciliation is something which I need to show in table number 5 of GSTR 9C. When we talk about table number 5A, friends, as we discussed earlier, under table number 5A, we need to map out the turnover of that particular state vis-a-vis with my financials. अगर मेरा कोई financials में 10 registrations थी, I am bifurcating those my turnover as per my financials into 10 different states. और जो भी मेरा जिस state का मैं audit कर रहा हूँ, उस state का turnover I need to plot in my table number 5A. It is very important to understand, friends. जितनी भी मेरी registrations हैं, total of 5A of all those registrations should match with my reported turnover. We should ensure अगर 5A is not matching with my reported turnover, it is my first duty कि हम पहले उसको map out करने के बाद ही अपनी reconciliation exercise चालू करें. The second point, when we talk about टेबल नंबर 5B के अंदर हमें अनबिल्ड रेवेन्यू जिसपे हमने टैक्स पिछले साल नहीं पे करा था इज समथिंग विच आई नीड टू ऐड बैक. जो भी हमारे ईपीसी कॉन्ट्रैक्टर्स हैं, जो भी हमारे रोड कॉन्ट्रैक्टर्स हैं, जो भी हमारे कंस्ट्रक्शन कॉन्ट्रैक्ट्स एज पर इंड एस एप्लीकेबल्स हैं, उसके ऊपर जो भी मेरा अनबिल्ड रेवेन्यू है, जो मैंने रेवेन्यू रिकॉग्नाइज करता बट जीएसटी पे नहीं करता, इज समथिंग विच आई नीड टू ऐड बैक. सेम 5C अनरजिस्टर्ड एडवांसेस जिसपे मैंने इस साल में जस्ट करा है, दैट इज नीड टू बी एडेड बैक. 5D डीम्ड सप्लाई, I have transferring my goods from one location to another's location. Supply cross supply is something which need to be added in table number 5D. 5E credit note after the end of financial years but reflected in the annual returns is something which I need to map out. Trade discounts is something which we need to map out. Unbilled revenue at the end of the year is something which we need to deduct. Unregistered advance at the beginning again is something which we need to deduct. So when we talk about the endeavor here is that there are various tables under table number 5, options under table number 5, and these, if you see, my friends, have been made optional for the financial year 18 and 19, and table number 5O is a mandatory field. So what we can do, so what council has given us an option is that okay, instead of bifurcating my turnover into different legs in the form of unbilled revenue, unadjusted advance, deemed supply, or any other reason, I can club all those reasons and I can put in table number 5O. But my friends, when we are doing GST departmental audit, any figure mentioned in table number 5O is under the scrutiny by the departmental official. And one more important point, friends, there is an internal press release stating that 5O amount need to be checked thoroughly by the department for the purpose of closure of the GST audit. So as an auditor, अगर हम 5O में कोई भी फिगर डालते हैं, it is our duty that we map out these transactions detailed wise, and we have the transaction wise detailed reasoning thereon कि मैंने 5O के अंदर फिगर क्यों डाली है. What is the reason I am putting the adjustment in table number 5O? It can be because of any reason. It can be because of a reason कि मेरा unbilled revenue था, unadjusted advance था, या कोई ऐसी टर्नओवर थी which was not a supply in itself, और मैंने by mistake assessee ने टेबल नंबर 9 के अंदर नहीं डाली है, is something which for which I should have a reason thereon. और 5O के अंदर is something which is being scrutinized by the department. That is our endeavor कि 5O के अंदर we need to have a transaction wise details. So when we talk about the reconciliation of 9C along with 9, any unreconciled turnover which form basis of my financials vis-a-vis with my turnover reported in 9 is automatically captured in unreconciled turnover, and the reasoning of which has to be explained in table number 7 or under the tax paid and payable columns. Now friends, we have understood these are the figure games. जो भी हमारी 9 और 9C की डिफरेंस आ रहे थे, that is because of the reasoning or the figures difference, जो मैंने reporting difference versus my reported difference. But friends, as an auditor, there might also be other cases जहां पर मेरी बुक्स में तो हिट कर रही, मेरी ना बुक्स में हिट कर रही ना मेरी रिटर्न में हिट कर रही, but still tax is payable on that transaction. For example, अगर कोई transactions मैंने कोई sale of goods करे, sale of inverter along with UPS करा, and I am showing that transaction at 18% in my books and in my GST returns, but as an auditor I am treating this type of supply as a mixed supply, and I am taxing this type of transaction at 28%. So अगर मैं फाइनेंशियल्स देखूंगा, फाइनेंशियल्स पे भी 18% आ रहा है, और GSTR 9 देखूंगा तो उस पे भी 18% आ रहा है. बट एज एन ऑडिटर मैं बोलता हूं दिस इज नॉट अ कंपोजिट सप्लाई, दिस इज एक्चुअली अ मिक्स सप्लाई एंड इट इज बीइंग टैक्सेबल एट 28%. सो ट्रांजैक्शन बुक्स में भी आ रही है, रिटर्न में भी आ रही है, बट स्टिल देयर इज एन exposure to an extent of 10% when we talk about. Same is a case, suppose I take another example. I am a medicine manufacturer. I float a scheme. अगर आप 10 pieces, 10 strips of 12% medicine लेते हो, so I give you one strip of medicine which is taxable at 18%. So जैसे मैं ये देता हूं, it can form part of a mixed supply. As I am bundling 12% along with 18% is something which I need to understand. Turnover मेरी books में भी आ रही है, 3B में भी आ रहा है, but there is a difference with respect to tax rate is something which we need to understand and which we need to map out. Second thing, Ind AS adjustments, friends. हो सकता है discounting, ECL expected credit losses की वजह से मेरी other comprehensive income hit कर रही है, मेरी वैल्यूएशंस की वजह से इंपेयरमेंट हिट कर रही है. सो दीज आर द रिकॉर्डेड ट्रांजैक्शन इन माय बुक्स, बट दीज आर नॉट इन माय रिटर्न्स, इज समथिंग व्हिच आई नीड टू मैप आउट. स्टॉक ट्रांसफर्स डज नॉट फॉर्म पार्ट ऑफ माय फाइनेंशियल्स, बट ऑन स्टॉक ट्रांसफर टैक्स हैज टू बी पेड. सो अगेन दैट फॉर्म्स डिफरेंसेस कि मेरी रिटर्न में तो आएगा बट मेरी बुक्स में नहीं आएगा. अगेन डीप सप्लाई, क्रॉस बिलिंग, my head office is providing services to my other branches, so that again forms part of taxable, that again form parts of transactions, supply transactions as per GST. So that again need to be recorded in my books में नहीं आ रही but my returns में आ रही है, again need to be map out. Supplies between related parties, valuation issues is something again which you need to understand from the point of view of outward supplies के कौन सी ट्रांजैक्शन मेरी बुक्स का फॉर्म पार्ट कर रही है या मेरी कौन सी ट्रांजैक्शन रिटर्न्स का फॉर्म पार्ट कर रही है बट बुक्स में नहीं आ रही. So this is very very important. So now coming to table number 9C, reconciliation of the taxable turnover. So 5A is the auto-populated figures which is coming from my table number 9C5 table. So that is an auto-populated figure. So we need to subtract the figures on which the tax was not payable, exempted supplies, and supplies on which the recipient has paid the taxes under RCM. So after deducting these things, we will have the taxable turnover, which we need to map out with my GSTR 9, and any unreconciled taxable turnover is something which we need to give the reasoning to. Table number 9, when we talk about, we need to give the reasoning with respect to the tax paid. And this again is a mandatory field for as an auditor to fill it out. So now, along with this background of 9 and 9C, now we will understand this the linking of 9 and 9C with some case studies. Now coming to the first case study, which Abhishek Mittal will take. This case study will help you to understand what transactions need to be reported in table number 9, table number 4 and 5 of GSTR 9, and what transactions need to be reported in table number 10 and 11 of GSTR 9.
So, having gone through the overview of outward supplies, let us now have a look at case studies related to the same and see how the transactions are to be reported practically. So, in our first two case studies, we have tried to explain the source from where transactions are to be reported in table 4 of GSTR 9. That is, whether the figures are to be reported in table 4 are to come from GSTR 1 or from GSTR 3B, or the amount as reported in books shall be mentioned in the same. In the present case study, the amount reported in GSTR 1, GSTR 3B and the books is different, and correct figures according to the GST Act is the one mentioned in the books. So basically, assessee has reported turnover of rupees 100 in its GSTR 1, have paid tax only on turnover of rupees 80 as per GSTR 3B. The correct amount as per the Act is the one reported in books, that is rupees 120. Now, the question arises as to what figures is to be reported in table 4 of GSTR 9. In this case, since no rectification has been made in subsequent years, the assessee shall be required to report rupees 120 in table 4 of GSTR 9, which is the correct figure. Now, since the assessee has paid tax only on rupees 80, difference shall arise in table 9, indicating short payment of tax. Same shall be paid by the assessee through DRC 03. तो जैसा आप देख सकते हैं, जो करेक्ट फिगर्स है हमारे बुक्स में, दैट इज रुपीज 120, वो we will report in table 4 in if it is B2C, so we'll report in B2C supply. If it is B2B, we'll report in B2B supply. We have reported 120 in table 4, because of which a difference has arisen in table 9 as the tax has been paid only on rupees 80. Since the assessee has short paid the tax, this needs to be paid through filing GST DRC 03. Now moving on to the next case study. In this case study, we have explained the scenario where tax has been paid by the assessee in subsequent year. So in this example, assessee has reported turnover of rupees 100 in GSTR 1 as well as the books, which is the correct figure. However, in GSTR 3B, only 80 rupees have been reported in financial year 18-19, and difference of rupees 20 have been reported in the next financial year, that is financial year 19-20. If we follow the mechanism explained in case study 1, difference shall arise of rupees 20 in table 9, and assessee shall be required to pay the tax on the same through DRC 03. However, since tax has already been paid in the next financial year, this shall lead to double payment of tax on the same transaction. Therefore, in cases where rectification has been done in the subsequent years, assessee shall be required to report figures as per GSTR 3B in table 4 of GSTR 9, and the difference on which tax has been paid in the next year shall be reported in table 10. So, in the present example, the assessee shall be required to report rupees 80 in table 4, which has been reported in 3B of financial year 18 and 19. The figure which has been reported in financial year of 19 and 20 shall be reported in table 10. As you can see, we have reported table rupees 20 in table 10, and in that case, no difference shall arise in table 9 of GSTR 9.
So just to summarize,
Uh,
the transactions on which the assessee has already paid the taxes has to be bifurcated in table number 4 and table number 10. Means अगर मेरे एक्चुअल टर्नओवर 100 थी, उस पे मैंने टैक्स चेक करंट ईयर में पे करा है या टैक्स मैंने नेक्स्ट ईयर में पे करा है, that has to be bifurcated in table number 4 and table number 10. बट कोई ट्रांजैक्शंस जिसपे असेसी ने आज तक टैक्स पे नहीं करा है, the transaction on which the assessee has never paid the taxes has to be shown in table number 4, and has to be the tax with respect to those transactions has to be paid through DRC 03, which can be evident through table number 9, which is flowing from table number 4. So now coming to the next case study, the spillover transactions. Suppose in financial year 17 and 18, I was having a turnover, book turnover of 100 rupees, and in GSTR also I showed rupees 100. But while filing 3B, I showed rupees 80 and 20 rupees I showed in 3B pertaining to 18 and 19. So 20 रुपए पे मैंने टैक्स 18 and 19 में पे करा for the transaction with respect to financial year 17 and 18. So अगर कोई ऐसा केस है, then what we have to show in table number 9. So for showing these type of transactions, spillover transaction, we have two types of options available. So first option is we can add these 20 rupees in table number 4. As soon as I add these 20 rupees in table number 4, my table number 4 and tax 9, table number 9 with respect to tax and tax payable will match accordingly. But there will be difference in my 9C because this is not a turnover of my financials for 18 and 19. So case क्या हुआ, 9 तो मेरी inflate हो गई rupees 20 से, but 9C की बात करूंगा तो this 20 rupees is not showing in my financials. So there will be an impact in 9C as 9C figures will be undershown. So we need to make adjustment in my 9C. The second option is कि ये 20 rupees amount है जिसमें मैंने टैक्स पे इस साल में करा है for the previous year transaction, I am not showing this in table number 4. So I am not showing in table number 4 20 rupees. Because of this, what will happen when I see table number 9, there will be difference with respect to tax payable and tax paid. Tax payable would be nil, but tax paid, which is auto populating through 3B files, there will be tax paid amount, thereby figures not being matched. So the second case, the thing is that 9 and table number 4 will not match, and we are absorbing that difference in GSTR 9 itself. और जब हम 9C भरेंगे, so there will be the actual turnover जो मेरी reported turnover से match होगी, and hence my table number 9C will match. So as an assessee or as an GST auditor, both the options to report these type of transactions are correct. It is up to us which approach we are following. As an auditor, we can always give our observations in part B of GSTR 9C. So it is just an observation, not basically a qualification to be precise. So when we talk about case study 3A, the fourth case study, so this is the same case study, just a vice versa. Suppose I have paid an extra tax in financial year 17 and 18, which I have adjusted in 18 and 19. Same way, this again can be shown in both the mechanism. We can show these difference in table number 4. Hence, the amount we can show in table number 4, Hence, table number 9 will match and table number 9C won't match. Or we can show table number 4 correct figures, thereby increasing the tax payable, the difference in tax payable and tax paid in table number 9, but my 9C will match. So again, we can follow any of the mechanism, but as an auditor, if I put my remark as an observation, this will only add value as the GST departmental official will be able to understand these type of transaction a bit earlier. Now, the fourth case study is with respect to my CGST and SGST liabilities, which I have paid in financial year 18 and 19. But actually, IGST was payable on such type of transactions. 100 rupees supply थी, मैंने उस पे 9 and 9 CGST और SGST पे कर दिया, whereas I was supposed to make the IGST payment. So while framing my GSTR 9, I will show this tax amount under the column of IGST only, thereby arising difference in C, I and S, which is evident on the screen. If we see I के अंदर I need to make an extra tax payment of 200 rupees. C and S के अंदर there is an excess tax payment of 100 rupees. So what we need to do is that I need to make I payment through DRC 03, and we need to apply for the refund of central and state tax through my refund forms.
So, as explained by Pitam sir, a specific table for reporting figures on which no tax has been paid is provided in GSTR 9 in the form of table 5. In said table, we are required to report exempted supplies, non-GST supplies, zero-rated supplies on which no tax has been paid, etc. As I have noticed in many companies, and as explained by Pitam sir, exempted supplies are generally not reported in GSTR 1 and 3B, which leads to a mismatch between books and the returns. In GSTR 9, we are required to report the figures of exempted supplies, for example, the interest income, sale of electricity, etc., in table 5, even though the same has not been reported in GST returns. One more thing to notice is that wherever exempted supplies is reported in GSTR 9, department can always ask to do common reversal as per Rule 42 and 43 of CGST Rules 2017. However, one thing to note is that reversal is not mandatorily required to be done for all exempted supplies as per explanation to Rule 42 and 43. For example, no reversal is required to be done for interest income. Similarly, since dividend income does not amount to supply under GST, reversal shall not be required to be done in respect of the same. However, for other income such as sale of electricity, renting of residential dwelling, etc., reversal is required. Kindly note that department is really cautious about the reversal and calculating the same thoroughly. Moving on to the next case study. So our next case study relates to excess payment of tax. In this case study, correct figures has been reported in GSTR 1 and books. However, excess tax on rupees 20 has been paid in GSTR 3B. Further, no adjustment has been made in the subsequent return. So, as discussed earlier, where no rectification has been made, assessee shall be required to report correct figures in table 4, that is rupees 100. However, what I've noticed in majority of the cases is that people do not report this excess tax in table 9 and instead adjust the same against future liabilities. However, the same is not legally tenable, and in my opinion, assessee shall report the correct figures in GSTR 9, that is, show excess tax paid in table 9 of GSTR 9 and claim refund of the same, provided time limit of 2 years has not lapsed. In our next case study, we have discussed one of the most common mistake made by the assessee while filing their monthly returns. Assessee by mistake reports their B2B supplies as B2C in GSTR 1, because of which the customer is not able to claim the credit as the same is not getting reflected in his GSTR 2A. In such a case, the assessee is required to make correction in their monthly return by transferring the amount from B2C to B2B And further, while filing the annual return, correct bifurcation shall be shown. That is, the supply is to be shown as B2B supply in GSTR 9.
So coming to the case study 8, this is actually not a case study. This is basically the legal aspect when we talk about recognizing the outward supplies. So as far as our experience is concerned, while doing the GST audit for various clients, we have also analyzed some of the transactions which actually does not form part of my financial statements, over which tax or not reported in my financials, along with the returns on which tax has actually been paid. For examples, common management, use of common brand name. Suppose Pizza Hut. Pizza Hut is being owned by an holding company, and the brand name is used by different entities. South entities using different brand name of Pizza Hut. South, the different entities they are using Pizza Hut. North, different entities they're using Pizza Hut. Same banks, SBI. SBI is a common brand name, whereas they are having multiple subsidiaries. So same brand name is used by different companies. So when we talk about the common usage, common trademark, common management, the common services are being provided by one entity and are being used by different entities. Just one more example. I have my HO in Haryana, and I have many other subsidiaries who are registered at the same address in Haryana. The employees of the holding companies are taking care of all the returns or all the taxation aspect of all the subsidiaries also, but their salary are being made by the holding company itself. So again, these forms part of my common management services. Holding companies actually providing services to all these subsidiaries companies when we talk about. So when we analyze these type of transactions, we should have an endeavor to inform the management. That's under GST, as per the related party definitions, these type of transactions fall under the purview of GST, over which GST is actually to be paid. And we need to make sure that transactions with respect to common trade name, common infrastructure, common management, whether the assessee is paying taxes or not, subject to proviso, subject to valuation rules, what will be the value on which tax has to be paid, whether we can avail benefit of the proviso in case the recipient is able to undertake 100% of ITC is something which we need to understand. But as an understanding, it should be our endeavor that अगर हमें कोई ऐसी एक्टिविटी दिखाई देती है, so we should make sure the tax on the same has appropriately been paid over by the management of the company. One more issue which we have faced: holding company is providing corporate guarantees in respect of the loans availed by its subsidiaries, infrastructure companies, real estate companies, EPC companies. होल्डिंग कंपनी है, उन्होंने अलग अलग SPVs बना रखी हैं, and the SPVs after it forms energy companies, solar energy companies, where while availing loan in those SPV companies, they are having, the banks is asking for the corporate guarantee from its parent company. So in case we see such type of transactions, again, the corporate guarantee to our understanding is a supply in case it is executed after 1st July 2017. So it will form part of supply on which tax has to be paid. So in case we see such type of transactions, it is our duty to report to the management that tax might be applicable on these type of transactions after analyzing, and which need to be paid. And once it is not paid and the time limits for ITC has also elapsed, it will be a dead loss for the company. The department official will come and demand for tax, and the recipient, my friends, won't be eligible for claiming the ITC subsequently. So as an auditor, it should be our duty, or we should make our possible intent to cover such type of transactions. So now coming to the inward supply. So the whole concept of the inward supply with respect to 9 and 9C will be taken by Abhishek.
So basically, as far as GSTR 9 is concerned, part 3 and part 5 form part of the inward supplies. Further, as you have seen that as far as in outward supply, taxable value was also required to be shown. But in the inward supplies tables, the taxable value is not required to be shown and only tax bifurcation is required to be reported. Now, let's have a walkthrough of GSTR 9 inward supplies. As you can see, table 6A is related to the amount availed in GSTR 3B in financial year 18-19. So basically, whatever amount we have claimed in financial year 18-19 in form GSTR 3B, the same shall be auto-populated in table 6A. Table 6B provides the bifurcation of this amount reported in table 6A except for the RCM supplies. So this further needs to be bifurcated. This needs to be bifurcated into inputs, capital goods, and input services. But for financial year 18-19, the government has made this bifurcation optional, and all the amount can be reported in the column provided for inputs. So, in my personal opinion, a person shall not bifurcate this amount into 3 parts and only report the amount in inputs, because if any mismatch occurs, the same shall be required to be proved to the department. Now, coming to table 6C. Table 6C and table 6D relates to the RCM supplies except for import of services. So wherever we have received these supplies from an unregistered person, the same needs to be reported in table 6C. The intention of this table was to report the supplies pertaining to section 9(4), that is wherever any purchase have been made from unregistered person. Now this section 9(4) is applicable on only limited persons, that is real estate. Further, if you procure any services from person on whom RCM is applicable as per notification 13 and he has not registered under taken registration under GST, the same needs to be reported in table 6C. However, again, for financial year 18 and 19, table 6C has been made optional and we can report the ITC amount related to RCM in table 6D. Table 6D is the one where person has taken the registration even though his supplies are covered under RCM. For example, as per notification 13, a service is provided by lawyer. Tax on the same is required to be paid under RCM. However, in most of the cases, lawyer takes registration, GST registration. So in that scenario, that amount of services supplied by the lawyer is to be reported in table 6D. Table 6E relates to import of goods. So in case we procure any goods from SEZ unit, the same also needs to be reported here, as a bill of entry needs to be filed by the unit located in domestic tariff area wherever any goods are procured from the SEZ unit. Table 6F relates to import of services. As I told earlier, that we do not need to report the RCM on import of services under table 6C and 6D, as a separate table has been provided for the same. As you can see, table 6C and table 6F are mandatory in financial year 18 and 19. Next is the input tax credit received from ISD, that is input service distributor. Table 6H relates to the amount of ITC reclaim. So suppose a person has not paid a payment within 180 days to its vendor and he needs to reverse the credit. The same can be reclaimed after the payment has been made. This amount can be reported in table 6H and it is mandatory. Further, if we have made wrong calculation of rule 42 and 43 and reclaim the credit later on, the same can be reported here. So as you can see, this table provides the bifurcation of the amount reported in our 3B, and in an ideal scenario, there shall be no difference in table 6J. Table 6K relates to the transitional credit claim through TRAN 1. As you know, the deadline for filing TRAN 1 has been in dispute for quite some time, and there has been a lot of judgment in favor of the SECI. So a lot of people have claimed the credit of transitional creditor in financial year 18-19 as well. The same can be reported here. Except for that, if there is any other ITC, for example, if any merger has occurred, or if there has been any transfer of ITC through filing ITC-02, it can be reported in table 6M. And table 6.2 reflects the total ITC availed, including the 3B availed through 3B, transitional credit, and any other ITC. Our table 7 relates to the ITC reversed or ineligible ITC. So table 7A is the ITC reversed where payment has not been made within 180 days by the recipient of goods or services. Yeah. Table 7B relates where the ITC has been excess distributed by the ISD and the same is reversed. Rule 42, 43, as you all know, it's for common credit. Wherever a person is making exempt supply as well as taxable supply, he is required to proportionately reverse the credit as per Rule 42 and 43. And Section 17.5 is the block credit. For example, food credit related to food and beverages, motor vehicles, goods disposed of by way of gifts, etc. That credit needs to be reported in Section 17.5, provided the value of the same has been reported in table 4A. If no value, table 4 of 3B, if no value has been reported there, then no entry needs to be made. To ease the burden of the taxpayer, government has provided an option to report all the reversals and Section 17.5 credit in the other reversals table, that is table 6H. So we need not bifurcate the same as per different rules, and we can report it under other reversals. Except for that, other reversals might also include ITC reversed through ITC-03. Any sale of capital goods that has occurred and we have reversed the ITC on the same, it all can be reported in other reversals. Also, I have noticed in many cases that many of the taxpayers have availed the KKC credit in their transitional forms and then reverse the same later on. The same can be reported in table 7F and 7G. So 7I reflects the total ITC reversed along with the Section 17.5 block credit. Next is this is most challenging table, that is table 8. In table 8, ITC as per GSTR 2A is auto-populated, the backup working of which is also provided in an Excel format. However, in most of the cases, the backup working and the Excel format does not match. That is, there's a mismatch between the figures reported here, auto-populated here, and the figures shown in GSTR in Excel format of table 8A. So to ease the same, there is an option with the taxpayer to upload a PDF form reconciling their GSTR 2A and their GSTR 3B and upload the same over portal. What we have done in many of the cases is that wherever there is any difference, we have made a PDF file and uploaded the same over the portal. And wherever no difference occurs, we have reported the same under table 8A, table 8B, table 8C respectively. Now, coming to part 5 of GSTR 9, in this table, we have to report that credit which pertains to financial year 18-19, but we have reported in the returns of financial year 19-20, that is before the deadline, September 2019. Table 12 relates to any credit which has been reversed in the next financial year, and the credit pertains to financial year 18-19. So suppose I have taken a credit of rupees 100 in financial year 18-19 and reversed 20 rupees out of that 100 rupees in financial year 19-20. The reversal of 20 rupees needs to be reported in table 12, and table 13 pertains to the credit which we have taken in the next financial year, and it pertains to the current financial year. For example, I have received an invoice in financial year 18 and 19 and taken the credit of the same in GSTR 3B of 19 and 20. I need to report that credit in table number 13. Now, coming to form 9C. So table 12 provides a reconciliation of ITC as per books and as per our GST return, annual return, that is GSTR 9. So in table 12A, I need to report the amount which I have booked in my financial statements as per the ITC ledger in my SAP or Tally or whichever software you use, and the amount which has been reflected in the financial statements. That needs to be reported in table 12A. In table 12B, I need to report the amount which I've booked in the current financial year, in the earlier financial year, but claimed in current financial year. So in an ideal scenario, the amount which I have reported in table 13 of financial year 17 and 18 shall be reflected in table 12B. Table 12C relates to that credit which we have booked in current year but taken in next year. In an ideal scenario, the amount which we have shown in table 13 of current financial year, that is financial year 18 and 19, shall be reflected here, and then we can provide the reconciliation as it can be matched. Now, this was one of the most challenging table under GSTR 9C, that is providing a reconciliation of expenses with the amount of ITC claimed. Thank God that the government has postponed the same, and for financial year 18-19, the said table is optional.
So now we have understood the tables with respect to GSTR 9 and GSTR 9C with respect to my input tax credit. How there is a flow of ITC in table number 6, table number 7 with respect to reversal in 9, table number 12, table number 13 of 9, with my mapping of the ITC actually claimed in my financials. So now to understand it a bit better, let us take some case studies. So we also have the case studies for few of the questions asked by the participants in the chat box. So the first case study, when we talk about, I have taken an ITC of rupees 100, whereas while filing 9, form 9 has to be filed by the company, 9C has to be filed by an auditor. So while filing 9, what company analyzed? Okay, correct ITC to be claimed was only rupees 90, whereas actually they have claimed rupees 100. So इस situation में what we will do? जब हम बात करेंगे टेबल नंबर 6A की, 6A is actually an auto-populated figures coming from my 3B. 3B में हमने कितना क्रेडिट लिया है? 100 रुपीज. सो 3B की वजह जो हमने 3B में क्लेम करा, बिकॉज ऑफ दैट 6A के अंदर देयर विल बी एन अमाउंट ऑफ रुपीज 100, whereas the correct ITC which I was supposed to take was rupees 90. So what I can do is that in table number 6B, I can plot rupees 90. I have to report 90 only with a difference in table number 6J of rupees 10. So there would, once this difference is there of rupees 10 because of excess availment of ITC by an SSC, this has to be paid through DRC 03 while filing my annual returns. So अगर कोई ऐसी सिचुएशन आती है हमारे पास जहां पर there is an excess ITC claimed, that can be rectified through my GSTR 9 and the difference amount I can pay through the DRC 03. Second case, this also frames part of the question and answers put in my chat box. So this the second case is 17 and 18 ka credit. There is a credit for 17 and 18 lying in the books in 17 and 18 also, which I have taken in 18-19. 100 rupees का क्रेडिट था जो मेरी बुक्स में था 17 and 18 की, but I inadvertently I have not taken the ITC of that amount in 17 and 18, but I have taken the ITC through by 3Bs in financial year 18 and 19. So अगर कोई ऐसी ट्रांजैक्शंस हैं तो हमें कैसे रिपोर्ट करनी होगी? अगर हम बात करते हैं 17 and 18 की फॉर्म 9 की, 100 रुपीज जो मैंने नेक्स्ट ईयर क्लेम करा था वो मैंने टेबल नंबर 13 ऑफ 9 के अंदर डाली होगी. एज अभिषेक एक्सप्लेन टू अस अ बिट अर्लियर, 18-19 का क्रेडिट जो मैं 19-20 में लूंगा that again I need to mention in table number 13. So same way table number 13 of 17 and 18 के अंदर हमने ये 100 रुपीज डाला होगा, बट जैसे ही मैं करंट ईयर में आता हूं, टेबल नंबर 6A के अंदर तो 100 रुपीज शो होगा क्योंकि दैट इज फ्लोइंग फ्रॉम माय 3Bs, बट द अमाउंट इज नॉट इन माय बुक्स, or amount invoice is also not uploaded by the vendor during current financial year. So as this ITC is flowing from my 17 and 18 returns, I can show rupees 100 in my input with a bifurcation in case I am available, in case that is available to me. So table number 6A and table number 6B would match, thereby leading to no difference. But subsequently, when we talk about table number 8 of GSTR form 9, उसके अंदर टेबल नंबर 8A के अंदर ये अमाउंट नहीं शो होगा फ्रेंड्स, क्योंकि दिस इज बीइंग अपलोडेड इन फाइनेंशियल ईयर्स ऑफ 17 and 18 itself. Whereas 8B की जैसी मैं बात करता हूं, 8B के अंदर 100 रुपीज ऑटो पॉपुलेट हो जाएगा because I have availed those 100 rupees in 3B of my financial year 18 and 19, and also I have provided the justification thereon. जो टेबल नंबर 8B की फिगर्स हैं वो GSTR 3B से नहीं आ रही, वो आ रही है मेरी पंच्ड इन फिगर्स में जो मैं टेबल नंबर 6B से टेबल नंबर 6H में डालता हूं. अगर मैंने 100 रुपीज टेबल नंबर 6B में डाला, so this will lead to difference in table number 8 of form 9, which as an auditor I need to put an observation that this difference was on account of ITC availed by the SSC in 18-19, which pertains to financial year 17 and 18, and the same has been reported in table number 13 of 17 and 18 GSTR 9. And another alternative to show the same, what we can do, we cannot show the amount in table number 6B, thereby leading to difference in table number 6J. So the second case is I am creating a difference in table number 6 instead of table number 8. In the same case again, friends, as an auditor, I again need to put an observation that this difference is on account of ITC for 17 and 18, which I have claimed in 18 and 19, and which has been depicted or shown, reported in table number 13 of financial year 17 and 18.
So, as explained earlier, we have figure in table 8A auto-populated from GSTN, the backup of which is also provided in the Excel format. However, the irony is that backup figure does not match with the actual figure shown in table 8A. And on account of the same, reconciliation with GSTR 2A becomes difficult. To reduce this burden, the government has also provided the option to upload reconciliation in PDF format. Having said that, let us now have a look at some of the reasons because of which the mismatch occurs. So the first pertains to where the POS is different from registered place of recipient. So suppose I have a registration in Delhi and some of my employees attend a business conference in Maharashtra. In that case, since the immovable property is located in Maharashtra, the place of supply shall be Maharashtra. However, my registered place is Delhi. So the tax paid to the hotelier will get reflected in GSTR 2A and will get reflected in Excel of table 8A. However, this credit will not get reflected in form 9 table 8A. Second, as I've explained earlier, in many of the cases, lawyer take registration even though their supply is covered under RCM. So wherever the lawyer has taken registration and they have issued an invoice in GSTR 1, declare the same in GSTR 1, it shall get reflected in GSTR 2A as well as Excel of table 8A. However, it will not get reflected in table 8A of form 9. Any credit which I have received from an input service distributor, from my input service distributor, shall get reflected in 2A, but not in Excel of table 8A and table 8A Excel and table 8A form 9. Now, as you all know, for filing GSTR1, we need to submit the data first and then log in the DAC and file the same. Wherever we have submitted the data but have not filed our GSTR1, the same shall get reflected in our GSTR2A, but not in Excel of 8A or Form 9. Any return which we have submitted after October 2019 will not get reflected in our Form 9 of Table 8A. Similarly, any credit note which have been issued in 1920 and relates to the supply which has been made in 1819 will not get reflected in Excel format as well as Form 9. So as you can see, all these reasons will get reflected in your GSTR 2A, all these type of transactions, but it will not be reflected in your table 8A of Form 9, and some of these will be reflected in Excel format, because of which a mismatch shall occur in the backup working and the auto-populated table 8A. Reconciling the same is really important, and in case any difficulty arise and you need to provide a detailed analysis, I would suggest you to file it in PDF form. So you can take up the next case study.
So coming to the next case study, the next case study is with respect to my credit notes. Friends, while doing the audit for 17 and 18 and 18 and 19, what we have seen is many clients have issued credit notes with respect to their services. I take an example. As a chartered accountant, I have billed 100 rupees to my customer. Whereas on the receipt of the invoice, customer agreed for an amount of rupees 80 only to pay to me. So there is some deficiency in services, you may say, and because of those deficiency, as per section 34, I have issued a credit note with respect to that supply. So once I issue that credit note, suppose that credit note is something which I need to adjust from my outward supply. Suppose next month there was outward supply and I adjust the same with my outward supplies. Next month, just bhi mahine mein, I have issued that credit note. If suppose I have adjusted through my outward supply in that particular month, then it is a correct treatment. There will be no impact in GSTR 9, nor there will be any impact in GSTR 9C. But friends, 9 and 9C of for 17 and 18 and 18 and 19, jab humne kara, what we have seen, many of the assessees, instead of adjusting this ITC, this outward liability, what they have done is that they have taken ITC, they have increased their ITC because portal was not accepting the negative figures. It may be because of a flow of a portal, but again, this is not an ITC to be taken. So the clients and the assessees have actually increased the ITC. Because of this ITC, whatever excess ITC we have claimed, this will appear in table number 6A, which is auto-populated from my GSTR 3B. But this is actually not an ITC which I have availed. So what I need to do, as we discussed earlier, we need to show the difference in table number 6J, as this was never an ITC to be availed by me. Thereby, once this difference arises, is something which I need to pay through my DRC 03. Subsequently, friends, जैसे ही I pay this ITC through DRC 03, this 100 rupees will be my excess tax payment. Means 100 rupees का मैंने tax एक्स्ट्रा पे करा है, जो मेरे टेबल नंबर 4 रेड विद टेबल नंबर 9 के अंदर शो होना चाहिए कि दिस 100 rupees is the tax on which I have actually paid the tax extra, and which for which we can apply the refund. And my friends, as far as our experience is concerned, department are also granting refunds of excess tax payment, even though it has been adjusted through my GSTR 3B, but they are asking for detailed documentation for granting such type of refunds, but it is not a case where they are not sanctioning such type of refunds. So we need to make sure that if case we have such type of transactions, we are advising clients properly, and we are taking also applying the refunds also within time limits. Otherwise, it will be a dead loss to the company.
Our next case study relates to the RCM liability reported in next year. So suppose I have procured a supply on which RCM was applicable in financial year 17 and 18. However, the tax on the same was paid in 18-19 and credit was also availed in 18 and 19 only. In that case, what we'll do is we'll not report any amount of RCM in GSTR 9 of financial year 17-18 and report the same under table 4 in financial year 18 and 19. Since the tax has also been paid in financial year 18 and 19, there will be no difference in table 9 of form GSTR 9. Further, since RCM liability does not get reflected in GSTR 9C, there shall no difference shall arise in 9C as well. A press release in this regard was also issued by the government, which said that in case we have missed to report the RCM liability in the previous year, the same shall be reported in annual return of next year. In this example, as you can see, we have an RCM liability of 100, which was booked in next financial year. The same amount of rupees 100 can be reported in table 4 of GSTR 9, and since tax has also been paid in financial year 18-19, there will be no difference in table 9 of GSTR 9.
So with this, friends, we have understood with case studies about outward supplies, interlinking of outward supplies with 9 and 9C, input with interlinking with 9 and 9C. When we are doing GST audit, in additions to the financial reconciliations or the number reconciliations, we also do have to have a legal audit or the sanity check with respect to the transactions. This, my friend, we are talking because there is also a detailed memo issued by the department for the purpose of conducting the departmental audit. So जो भी departmental audit हो रहा है, there is a detailed memo issued to the jurisdictional officer or the audit commissionerate for the purpose how to carry out the GST audit by the department. So friends, while doing the GST audit, you all know that we need to report the inconsistency. So as an auditor, we need to verify, we need to comment on the compliance along with taking into cognizance all the legal provisions of the act. There are many judgments, notifications, FAQs, orders, circular, advance ruling, press release, tweets, which may be similar or which may be controversial. They may be contradictory to one or the other, but still as an auditor, we need to map out these difference and we need to try our best to synchronize these transactions according to the GST law and report accordingly as per our legal audit. Just to summarize in a quick sense, as we discussed earlier, concept of single supply, composite supply, mixed supply is something as an auditor which we can vouch upon and for which we can check that the tax has been appropriately paid or not, whether there the notification number was eligible to us or not. Suppose I am providing road construction water supply to a government, which I am claiming to be a government, but actually it is not a government entity as per the definition of the, as per the exemption notification. So whether I can avail the benefits of the reduced rates or not is something which I need to check. So as a whole, when the assessee is claiming any benefit or whether they have not availed any benefit, as an auditor, in case we have such a scenario, we should definitely map out these things and we should report it in our observations and we should communicate with the clients. There may be the transactions which are not in the books, but the transaction are such on which tax has to be actually paid. Cross charge, same management, corporate guarantees, free supplies is something which we have already discussed. But these are transactions which is not depicted or not shown from the face of the balance sheets. So these are the transactions which as an auditor, I need to find out myself while studying the notes to accounts, while studying my cost audit report. Suppose cost audit report says that there is an excess utilization of goods which does not form part of my standard input and output ratios. What has to be done, whether section 17.7 applies, 17.5 applies with respect to ITC reversal or not, is something which I need to understand.
Next is a verification of ITC. So section 16.2 prescribes conditions on the basis of which ITC can be claimed. One of the condition is physical possession of invoice. So if a company is not in possession of invoice, then he cannot claim it cannot claim ITC. In our experience, in most of the cases, department officials ask for 100% of the invoices and match it with ITC register. However, if it is a big group company and provide checking 100% of the invoices is not possible, they check at least invoices for each of the vendor. So company needs to maintain the records of the invoices and claim ITC on the basis of the same. Similarly, in lot of the cases, company possesses invoices on which it is written that these are computer generated invoices and signature is not present. In that case also, it shall not be considered to be a valid document under GST and ITC shall not be available. Similarly, company needs to take care of all the block credit of the goods which have been disposed of by way of gifts, such as the CSR activities consisting of supply of free goods or the retention money, where suppose a department claims that in case of retention money, the payment has not been made within 180 days and the same is required to be reversed. So all these things needs to be taken care of while filing the annual returns. Next relates to the valuation. So basically, as you know, each of the registrations shall be treated as distinct person under GST. And even if any supply, for example, as Pitam sir explained, if there is a common trademark or common brand name, that shall also be without any consideration, that shall also be considered supplies under GST and tax shall be required to be paid on the same. One of the most important example which occurs in most of the companies is of corporate guarantee. So a person need to value the corporate guarantee on the basis of judgments which have been there in income tax or through a registered valuer and get paid tax on the same. Similarly, there can be pure agent transaction. In valuation of incentives is really important while filing the annual return, etc. Next is our transaction with employees. So wherever we have made any recovery from the employees, be it insurance recovery, be it food recovery, tax shall be required to be paid on the same. It needs to be taken care of. Similarly, department officials ask for tax on notice pay recovery, treating it to be a toleration of an act. Even though there have been many judgments under Service Tax Act that it is not a service, still department officials treat it as service, dispute the same and ask tax. So in my opinion, wherever a small amount is involved, a small amount of notice pay recovery has been done, pay tax on the same, and there's no point of going into litigation. Then there are scheduled 2 transactions, that is our worst contract transaction, construction activities where OC consideration have been received before obtaining OC, etc. The same needs to be checked.
So same way as Abhishek pointed out, one more important point, we need to have specific review of the discount policies made or the sales promotion policies made by the management. Any of the clients, the marketing company, HUL, Pepsi, whatever the case may be, because the department have a specific view, or there might be a contention that there might be a reversal when we talk about. So as an auditor, we need to map out the discounts and the schemes policy in place, whether the discounts and the scheme policies are appropriate or whether tax has been appropriately paid over the same. It is not a case of mixing of a higher rate of supply with a lower rate of supply. So it can be a mixed supply, or it can be in the case of whether it is a trade discount or not, whether it is a post-factor discount or whether it is a pre-factor discount, again is something which we need to understand. Now, apart from that, the place of supply provisions are something which we need to understand. Suppose an architect services is to be provided with respect to any immovable property. That is something which where the place of supply hits the place where the immovable property is situated. Same is the case with the warehousing services. Whether we can have a different view with respect to the warehousing services or not is something which we need to understand. So the whole agenda when we talk about of carrying this 9 and 9C is to analyze the legal angles also with respect to the time of GST payment, place of supplies, valuation rules, whether these transactions form part of supply or not. There's something which we need to understand as a whole, and as an auditor, we ourselves are giving in comfort, okay, whether these transactions on have been carried out on at an arm length price, or the transactions, the tax has been appropriately paid or not, is something which we need to understand upon. Now, coming to the last point for today, that is the interest on delayed payments. Friends, as per as our understanding is concerned, GST के अंदर the interest rate applicable is 18% only. 24% interest rate is not applicable currently, as section 42, 43 are still in abeyance. So when we talk about the interest on GST component, whether it is ITC reversal, whether it is short payment of outward supplies, the interest has to be paid at a rate of 18% only. There might be a case, anti-evasion departments, DDGI department are insisting for 24% interest rates, but still, as far as our opinion is concerned, department can charge out only 18% interest rate with respect to the interest, when we talk about interest as a whole. So this is whole when we talk about for today with respect to 9 and 9C. So after Shubham takes it up, we can take up the question and answers as pointed out in the chat box. Over to you, Shubham.
Thank you, Pitam ji and Abhishek ji. Now, quickly, as we have already surpassed the time, Nikita, it's up to you, and she'll show a small demonstration of Webtel software of GST, WebGST, which is India's leading e-filing software for GST return. And she'll show quickly how to file annual return through WebGST. So over to you, Nikita. You have 5 minutes.
Yeah, so now we'll see how to file GSTR 9 and 9C from WebGST software. So first thing is that first question which comes to everybody's mind is that if we are not using the software while preparing and filing our GSTR 1 or 3B, so can we file GSTR 9 or 9C from the software? So the answer is yes, we can file the return from the software if we are not using other return filing from the software. And for this, we have given a simple tab, GSTR 9 9C. Here you have to click on the button, and when you click on GSTR 9 button, so you can see a form like this has been opened. Here you can see that the financial year is coming 18-19, and all the months of the 18-19 is coming. Then GSTR 3B, GSTR 1, and GSTR 2A details are coming. So when you open this GSTR 9 form, what we do is we go to the GSTN portal, and from there we fetch the data of GSTR 3B, GSTR 1, and GSTR 2A, on which we will update the data in GSTR 9, and accordingly you can see the data in GSTR 9. So you can prepare the return without uploading the your GSTR 1 and 3B from the software. Now here you can also see that apart from 18 and 19, we are downloading the data of GSTR for the financial year 2019 and 20 for the month April to September. This is because we can, as everybody knows, that we can file our, if we have missed something, we can update that particular things till September of the next financial year. So for that purpose, we are downloading the data till September of next financial year. So we are downloading GSTR 1 for the whole year, and from April to September of 2019. Similarly, 2A data is also downloading for the same year. Now, once we have downloaded the data, our GSTR 9 will be automatically populated. Here you can see that this particular form, this is same as which is given on the portal. So all the columns are same. So I'm going to show you the features which we have, extra features which are available in the software. Now the foremost thing is here all the tables are same, like 4A, 4B, all these things are same. But here one extra thing which you can see in the software is that here the data is coming, which is coming on the portal GSTR 9, but there is no option to see that particular bifurcation. But here the bifurcation can also be seen. Like here you can see that the amount of B2C is coming here, but if you want to see that how this particular amount has been calculated, so for that you have to click on this particular button. So after clicking on this particular button, you can see that month-wise bifurcation is coming here. Like for the month of April, if you will click here, you can see that B2CS data for the month of April is this much. And in case in April month, if B2CL or CDN data was there, that particular data would have been shown here under this particular heads. So from here, you can see the amount from which we have calculated this particular data, and you can cross check your data and check if anything is missing or if you want to change any particular thing. Similarly, for 4B, B2B data, you can click on this particular button and you can see the data. Here, one important thing is that you can see here month-wise data also, invoice-wise data also. If you want to see all the invoices on a single click, you can click on invoice-wise and all the invoices for the whole year will be displayed. Other than that, if you want to see party-wise bifurcation, you can click on party-wise and your data will be displayed to you. If you want to make any changes in these particular data which is shown to you, you can click on added manually. Here you can manually add that particular amount if anything is missing in this particular data and save the data from here. And when you save the data from here, your data on the front screen will also be changed. Other than that, if you're seeing this particular data and if this data is not correct, what you can do is you can right click on this particular cell and we'll click on view history. Here you can see that auto calculated value is this much, that is 730609. But in case your present value is not correct, you can what you can do is you can change this particular value and you can save this thing, and you can in comments you can add the reason why you are changing the data and you can save this particular data. So this particular data will be changed here and the color for this particular cell will be changed, so that next time when you see this cell you can identify that this particular data is not calculated by the portal and it's been updated by you. So other than that, what we have given is on every particular heading like details of advances, you can when you click here, the all the cells of this particular 4 data will be shown to you. From here you can also change the data in case you want to change any data, and you can also add the notes to any particular cell in case you want that for future reference. So this particular thing is very important, as you in case you want to check this client's data afterwards, you can see the comment and from there you can identify the reason why you have changed any particular cell. So this thing is given in the whole form. These cells have also been explained to you. The heads have already been explained to you, so I'm not going on into that thing. This particular thing will be done in all the heads. After that, we'll be moving to 8A, which is very important. Here you can see that 8A thing is coming. And while you click on this particular head, 8A, you can check month-wise data, similarly invoice-wise data, party-wise data. Also, 8A button is, as you must be knowing that 8A button is also available on the portal. But what we have done is we have bifurcated the data month-wise here, and then after month-wise, you can see ITC next year. This is very important, as the vendor must have, if your vendor have filed your invoice in next financial year. So what you can do is you can click in ITC next year, and from here you can see the invoices which have been uploaded by the supplier in next year, and you can identify its effect on your return and your taxes. You can see here the details of invoices is coming, details of debit credit note and details of amendments, and its total effect is coming. Other than that, another option is invoices not included. That is in case you are not eligible to avail the credit, but these invoices are coming in your two-way. So what you can see is you can click on invoices not included, and from here only you can identify the invoices on which your credit is not available, and reason for not excluding these particular invoices also shown here, like POS lies in supplier state. So in case your place of supply is in supplier state, so you cannot avail the credit. So reason is given here. So you can see these reasons, and accordingly you can identify why this particular credit has not been added in your 8A column. So other than that, this is all about your 8A. After that, in all the columns where we can take the data from GSTR 1, 3B or 2A, those particular columns have been updated here in the form, and automatically calculations are made on the basis of that. Similarly, in table number 10 and 11, where amendment data has to be shown, here you can see in table number 10 and 11 also button is given. You can see here that in case any particular changes have been made in next financial year, those particular things will be shown here to you, and you can easily and also here return period is coming, so you can check in which month next year's which month this particular data has been uploaded, so you can identify this particular thing. Other than that, HSN summary is also been updated here. You can see that HSN code, UQC, total quantity, description, is concessional, taxable value, and taxes. All these things have been fetched from your GSTR 1 uploaded by you. So your HSN summary has been prepared on the basis of that. This thing is not available on the portal, so you can prepare it from here. And after making the changes, if you want to make any, you can save this particular data and click on save JSON. So you can generate your JSON from here and upload the data on the portal from here only. Other than these things, what we have given is we have given guidance instructions for filing your for inserting the data in GSTR 9. Other than that, recalculate button is given. So once you have downloaded the data in your GSTR 9, and in case your data is not properly downloaded, you can click on recalculate button and your data will be downloaded again. Next thing is export. In case you want to export this particular form in PDF or Word, you can do the same from here. Other than that, videos is given. These are some videos which are there for your help to prepare GSTR 9. Then month-wise data is also bifurcation of your all the heads. You can see here that 4A, 4B, 4C, 4D, 4E, all the columns of your GSTR 9 are coming here. And when you click on this particular head, your month-wise data will also be shown to you from here. So this is for your help. From here, you can check your month-wise data also, which is being uploaded in your GSTR 1 or GSTR 3. Next is save button. Once you make any changes in the return, you have to save the data. Then only your changes will be saved. Print, in case you want to take the print of this particular form, you can go to print. Then save JSON. You will have to click on save JSON. For your uploading the data. So here there are two steps. First of all, you have to save your data on the portal. For that, you have to click on save GSTR 9 to GSTN portal. And then after saving and after checking that all the data is correct, you have to click on file GSTR 9, and from here you can file your GSTR 9 from the software only, and there is no need to go to the portal. So this is all about our GSTR 9. Now Shubham, you can ask the questions, take up the questions.
Yeah. Can you stop your screen,
Yeah.
Nikita? So thank you so much, Nikita, for taking an overview in a very short span of time. So in case any of you are interested in our software, can contact us. I have mentioned my phone number in the chat box. And over to Pitam ji and Abhishek Mittal ji, who have been deliberating us from past 90 minutes. So we have given you a much needed break, sir, before question answers.
Yeah, sure.
You may carry on now.
So the first question is, how do we report on the ITC reversals which was not reported in GSTR 3B of 18 and 19 or 19 and 20, like common credit with respect to rule 42-43? So, sir, in case there are some reversals to be made as per rule 42 and 43 for which tax has not been paid in GSTR 3B, while filing GSTR 9, in table number 7, as discussed by Abhishek, which will be mapped in table number 9C, the difference would arise with respect to actual utilization and actual available, and henceforth the difference can be paid through DRC 03. So as simple as that, we can report this type of transactions for which reversal has not been made in table number 7, and the difference we can pay through DRC 03, and the difference would be mapped in 9C. So the second question is, what about the liability under RCM booked and paid in 1819, but ITC of such tax has been availed in financial year 19 and 20? What about the advance receipt, but no tax has been paid and no invoice has been issued? Whether such case will be reported in table number 4F. So, as the situation is such, there was the RCM liability in financial year 18 and 19, where I have not paid the payment of that RCM liability in 1819. Instead, I have made the payment in 1920, and I have also availed the ITC in 1920. So when we talk about such type of transactions, these type of transactions need not be reported in table number 4F of GSTR 9 for financial year 18 and 19, as these does not form part of output supplies and tax has already been paid in next financial year. So these type of transactions need to be reported in financial year 19 and 20 itself, as this will also not have any impact with respect to my outward turnover. As an auditor, what best I can do is that I can put a remark stating that the RCM liabilities of 18 and 19 have been paid in 19 and 20. So as an auditor, if the liability has been paid before filing my GSTR 9 and 9C, we can put a remark that it has already been paid in next financial year. So Abhishek, in case you want to take some queries.
Yes, there is one question which says if no self-invoicing is raised and credit is taken, then it is valid, as in many cases self-invoicing is not raised. So as we are all aware that whenever a supply is procured under RCM, the recipient is required to issue self-invoice as per section 31 of the CGST Act. As per section 16, ITC can be taken only when a person is in physical possession of invoice. Rule 36 states that for taking ITC, self-invoice possession of self-invoice is mandatory. So wherever we do not have a self-invoice, the person do not possess a self-invoice, he cannot take credit of RCM. The department can very well dispute the same.
So one question is, sale of mutual fund will attract reversal under rule 42-43. Sale of shares will attract reversal under rule 42-43. Yes, friends, sale of mutual funds and sale of shares has been categorized as an exempt supplies under GST, and from as per the valuation rules, 1% of the total transaction values is treated as exempt supply for the purpose of GST. So whatever transactions I have made, 1% will be treated as exempt supplies, which we need to report under table number 5 of GSTR 9, and reciprocating ITC need to be reversed in respect of common credit for the same. There is also one more question. 42-43 reversal is to be made only in condition for capital goods in case of exempted sale, or it has to be done in all the cases? Rule 42-43 gets attracted only in case we are supplying some exempted supplies. Exempted supplies are there. In case there are no exempted supplies, rule 42-43 reversal does not get attracted as prima facie. 42 reversal is with respect to goods and services. 43 is with respect to capital goods only. And please, friends, it is very, very important. 42-43 reversals are to be made for only common credits. For credits which are used exclusively for taxable supplies, no reversals need to be made. Input for the purpose of only exempt supplies, not eligible to take the ITC. Common ITC only eligible for reversals. Any other question, Abhishek?
So there is one question. It says in RCM taxable, there is wrong declaration of taxable amount. There is zero extra, but taxes are paid accurately. How to rectify? So as discussed, wherever no rectification has been made subsequently, correct figures are to be reported in table 4 of GSTR 9. So herein we have to report the correct amount of RCM liability, and since tax has been paid on the correct amount, there shall be no difference in table 9 of GSTR 9. Sir, would you like to anything on this question?
No, one more question. If advance of 2017 and 18 is still without invoice, where to show? So the case is that there was some unadjusted advance in financial year 17 and 18 for which invoice has not been issued. So when we talk about our taxable transactions for 18 and 19, this is a transaction which has not been adjusted, nor I have received, nor I was supposed to make the payment. So in such cases, these type of transactions will not form part of my 9 for current year, whereas this need to be mapped with respect to my unadjusted advance at the end of financial year in my table number 9C. Any other question, Abhishek?
No, I guess there's one question for Webtel.
What's that? It's regarding to the return of that software. I've answered them in the private chat, and I've also left my number for any more inquiries for Webtel software. I hope we have taken all the question, right, Abhishek?
Yes,
There is one more
Yeah,
question.
yeah.
Credit of invoice for 17 and 18 has been taken in 18 and 19. How to report these type of transactions? So Vinay ji, as this also we have taken in our case study, any credit for invoices 17 and 18 we have taken in 18-19. So इस केस में होगा क्या, टेबल नंबर 6 ऑफ 9 के अंदर तो वो क्रेडिट आ जाएगा. सपोज 100 रुपीज का क्रेडिट था जो हमने 17 एंड 18 का 18-19 में लिया था. सो व्हाइल फाइलिंग माय 9, टेबल नंबर 9 के अंदर, टेबल नंबर 6 ऑफ 9 के अंदर these 100 rupees would be shown. In case I plot these 100 rupees in table number 6B, the reciprocating difference would arise in table number 8, which is my reconciliation of ITC with my two-way reconciliations. So the difference will arise in table number 8. अगर मैं उसको टेबल नंबर 6 में नहीं शो करता, so difference will arise in table number 6. But ये 100 रुपीज को मैंने जब 17 एंड 18 की रिटर्न फाइल करी होगी, आई वुड हैव शोन इन टेबल नंबर 13 ऑफ 17 and 18. So while filing my 9C of 18 and 19, I will give an observation that this difference of 100 rupees, whether in table number 6 or whether in table number 8, is on account of ITC pertaining to financial year 17 and 18 invoice, which I have taken in current year, and the same invoice has been shown in table number 13 of 17 and 18 itself.
So there is one more question. How to have credit of bank charges where amount is shown in GSTR 2A but no receipt of invoice? So in most of the cases, bank issues a bank statement which carries a unique number. So you need to map that number with the invoice number shown in GSTR 2A, and if you possess that document, you can create credit on the same.
I think so. We have taken all the. There is one more question. Once. What about the advance received on which tax is payable but no tax has been paid? No invoice has been issued against the said invoice in 1890. So we are taking a case where I have received an advance on which tax has to be paid, but I have not reported in my 3B, nor I have reported in my, nor I have issued, nor the invoice has been issued till date. So while framing my 9, this amount I have to show in table number 4F, and once I show this amount in table number 4F, tax payable in table number 9 would be higher than actually tax paid, and hence the difference amount is something which I need to pay through DRC 03. Subsequently, while issuing the invoice, I can take the benefit of this tax which I have actually paid through my GSTR 9 itself.
Right, sir. I think we have done with most of the questions now, as
Yes.
the session lasted of around 2 hours. So I would like to first of all thank both the speakers of the day, actually 3 of them, CA Pitam Goel ji, Abhishek Mittal ji, and Nikita as well from our team, for deliberating yet another time on our platform. And I think you did a great job, sir. And we had overwhelming questions and also the responses on both our platforms. people have taken time. Now, further to this, I would also like to thank all the participants who have joined us in this time of the day, wherein they have their task to complete. But I think this was also important. So thank you so much, Pitam ji and Abhishek ji. I hope we'll do something interesting in the future as for our audiences.
Definitely.
Thank you, Vakil, and thank you all the participants for listening to us with all your queries. And thank you, Shubhamji. And with this, we definitely would like to have few more webinars coming forward on various interesting topics along with Vakil.
Thank you. So we have just to wrap up, we have the contact details of our organization. So if you have any doubts which is left, you can mail to us or visit our website, webtal.in. Thank you so much.
Thank you.